Oh, good morning. This is October 9th, 2020. Dan Murphy here, Seth Rivers on the other side of the beautiful plexiglass. Um, we wanted to kind of give you some updates in video format. We're going to be, we've created a three-part video series. Today, we're going to focus on kind of, some of the pre-election things. Next part, we'll get into how we've kind of planned and structured portfolios for what we think could potentially happen either on November 3rd or sometime after November 3rd. And then we're going to try and have our third and last video right before the election, just to kind of firm things up as well. So we hope that you all had a great summer. We are, we're happy to bring this to you. We look forward to it. It's a great time of year. I love the fall. You can see I'm kind of dressed like it too, so I apologize for that. Seth's in a nice shirt and tie, and I dress like a ragamuffin. But so that's the key thing is we're going to try and give you a lot of information this month, a lot of commentaries that you'll get on a regular basis, 3 videos as well. We think that you'll have plenty of information. You'll know where we stand. You'll know how the election's going to impact or could impact you. Besides kind of keeping track of some of the world-class events and how quickly some things are developing. And of course, obviously in the forefront is COVID. So we certainly can't forget about that, but certainly going to be an interesting next month or less now, leading up to the election. And we want to kind of guide you that. I mean, typically as I'll always say that, certainly at the end as well, anytime you have any questions, you can always, contact us as well. But we're going to get right into the material and kind of talk a little bit about the election season, right? I mean, what else is there to talk about right now? I love this slide that Seth put together, the year none of us will forget, and hopefully you're still all healthy and staying safe. And we talk about that a lot. People's idea of maybe what the new normal is going to look like. I don't even know if we know what that's going to be right now, how it's going to look. There are certain places, we talked about this a lot with not only, our clients, our great clients like yourselves, but with all of our other partners from different fund companies, different management companies, economists, portfolio managers, anyone that we really speak with, everybody's talking about the same things. And our biggest concern is obviously what the new normal is going to look like. From your favorite restaurant down the street, are they going to survive? I just went back to the gym a few weeks ago once our gym reopened, and it's pretty bad in there, certainly very desolate. I'm not sure how they're going to survive this if it doesn't improve. And then, of course, we've got the travel industry. I mean, airlines are looking for more of a bailout package because they're starving, right? Certainly these no-fly lists or quarantine lists, certainly that with New York, I think we're, as of today, back up to 35 states that if you travel to them, you've got to, quarantine for 14 days after you get back. So that's certainly not going to be good for travel when you're trying to get people, to fly again, besides, the fear of flying just with COVID in the air. So there's a lot of things that are just going to be up in the air, not even affecting the economy as well. But, certainly will be, a year that none of us will forget. And hopefully it'll be the type of thing where we can eventually look back on it, remember it, hopefully not have too many bad things happen during 2020, but hopefully it's something to draw on in the future. Okay, this is probably a good one to start with, right? Because, certainly, as I said in prior videos, we were surprised once we reopened our office to in-person meetings. We are following New York State guidelines. These are not Murphy Wealth Management Group guidelines. And the guidelines for New York State are very simple. When you arrive, in our parking lot, basically what happens is You've got to call the main phone number, and then one of the nice Murphy Wealth Management staff will answer the phone. You'll announce that you're here, that you've got a mask, that you're not showing any kind of symptoms, and that you've been symptom-free for 14 days, have not been around anybody with COVID. At that point, you'll be welcome into the office. The waiting area is closed. Your temperature will be taken prior to the meeting, and then you will be walked into this conference room right now. Seth and I are usually on the other side together on the plexiglass side. You'll be walked in by one of the staff members. You don't have to touch any door handles. You can sit in one of these chairs where the plexiglass, which I know is hard to see in this video, but it's all across the table here. You'll basically sit down, and more than happy to take your mask off after the meeting starts, or you can leave it on, and we certainly will ask the same thing. As long as you feel comfortable with us taking our mask off, we'll take it off. If you do not feel comfortable with us taking our mask off either, please let us know that. We have no problem leaving it on the entire time of the meeting. After the meeting is over, basically you will leave the room first. You will have to touch the doorknob, which has already been wiped down. And then basically at that point, we'll sanitize the whole room after you leave and after we leave as well. So, same thing when you leave the outer office door, you'll walk to the conference room, to the waiting room area, walk out the door, and then someone will wipe down the handles. So typically that's our procedure. It's one that we have to follow in New York to stay open. And we want to let you know that because, some people have just come to the office without making an appointment first, and that's difficult to welcome you in that environment. Sometimes we have people already coming in or going out. Our promise to every client that's in the office is that when they leave the office or enter the office, that there's nobody else they're going to be coming in contact with except the person that's taken their temperature and escorted them back to the conference room to have our meeting. Same thing when you leave. So, that really cuts down on that. So when we have visitors that are coming in without setting an appointment first, there is a bigger risk in that they can run into somebody that happens to be coming or leaving at the time they're also here as well. So in any case, so we wanted to kind of just, you're more than welcome to come in. We're perfectly safe here. Every client that's come in and had a meeting, we've had tons of them, much to our surprise. We didn't expect that we'd have so many people that wanted to come in and see us face to face, but we've done that. We've done a ton of those since we've reopened. And I think that, based on my calendar, the rest of the year, we're going to have a lot more face-to-face meetings as well. So that's, kind of our procedure. We want to go through it just that you're aware that we don't really like to welcome people that are coming in without an appointment first. So you've got to call the office first.
I pulled this quote by Gandhi, of all people, since we're going to start to talk about politics and the election going on. And this quote by Gandhi was that anyone who says they are not interested in politics is like a drowning man who insists he is not interested in water. The point is, regardless of your party affiliation, we're all Americans, and we have a right that was given to us and earned, by past members of our country. And every election has consequences. So regardless of which side of the aisle you fall on, go out and vote. I mean, it's important to exercise that right. And frankly, if you're not going out there and having your voice heard, then why do we have this democracy that we have?
Yeah, and I think to go on to Seth's point, I know a lot of people in the past, and maybe even myself at times, depending on what your party is, you may live in a state where, maybe it's always Democratic all the time, like in this state, or maybe it's Republican all the time in other states. Some people that are on the opposite side of the party just say, well, I'm not going to vote because my vote doesn't count anyway, because it's never going to matter. It's never going to change the result of, let's say, the state. Obviously, we all operate under the Electoral College. So, but it is important, when you look at, your right to be able to do this, it is a really great, opportunity. And when we kind of look at what's going to happen this year, especially, I think this time last election, 2016, the presidential election, you had about 80,000 people right at this point had already cast a ballot for the presidential election. And right now, just as of today, we're at 6 million people have already cast a ballot. So, that, and I think that's a direct correlation to COVID, nothing else more than that. But basically, people are already thinking ahead, saying, I don't want to stand online during November 3rd. I'd rather just, not have to worry about that. So let me get my ballot in as quick as possible. This is the last day in New York to register to vote. So, if you want to do that, if you've got children that are home that have been, here for at least 30 days, they can still register to vote and let your voice be heard. So I think that's very important. And I have had a lot of people in the past tell me that they don't vote anymore because it never matters, but it does matter.
Yeah, and to jump off Dan's point, it's so easy, today being the last day. If you're watching this video, you can go online, just search Register to Vote New York. I helped my wife go through that the other day. She got it done in 2 minutes. If you want to vote, there's no excuse not to get it done.
Yep, I agree. What's at stake? Well, that's why we're going to go through this in 3 parts. There's a lot at stake. But let's start off with the political part of it first, right? So, Senate seats are different, right? Senators are in office for 6 years. So basically, because of that, you've always got that rotation. Basically there's somebody always every 2 years, or there's always a third of the constituents are up for grabs. And so in this case, very similar, right? Every 2 years, you're going to have about a third of the Senate come up for election or re-election. So in this case, we've got 35 seats up for grabs this time, of course, out of 100, 2 senators every state. Today, if you look at the makeup of the 35 Senate seats that are available, 23 right now are controlled by Republicans, and 12, or about half, are controlled by Democrats. So there is a lot, that's up for grabs. Not to say that the House couldn't actually have the same kind of issue, but as far as Senate seats go, let's face it. Right now, I think it's only 53 Republicans to 47 Democrats.
Yep.
And so it doesn't take much to flip, let's say, a majority from Republican to Democrat or Democrat to Republican, depending on the actual makeup. But so these races, especially the Senate races, are very important. It's a small majority that Republicans have. And of course, they're all going to be fighting tooth or nail for it.
Yeah, and to jump off what Dan's saying, you think about back in 2018, it was kind of flip-flopped. The Democrats were defending more seats back then. Really, you're looking at only a 3-seat swing, and you'd have 50-50 Senate. So, but this comes around every election cycle, where there's going to be one party that's having to defend more seats and others that are trying to really attack. But it just kind of goes to show how close that balance of power is, specifically in the Senate.
Yeah. It's the same thing as we go to the next slide and start to talk about, of course, the House, because every representative of the House only has 2 years as far as their term goes. They are up for re-election every 2 years. So all 435 seats are up for grabs. And yes, while it is controlled right now by the Democrats, it could easily go the other way very quickly as well. So there's politically, you've got the presidency up for grabs. You've got 35, or about a third of the seats in the Senate that are up for grabs, and all the seats of the House are up for grabs. So it's a big deal.
We're going to kind of paraphrase this slide, but the key is, if you look back at the last 6 times the sitting president ran for re-election, one of the barometers of if they would be re-elected has been their approval rating. Anytime that there's been a president with a 40% approval rating and above, they've always gone on over those times to win a second term. If they've been below that, then no, they have not won a second term. So as much as a 42% approval rating doesn't not necessarily, it's not 50%, it's not a majority, historically, it still would show good signs for President Trump being the incumbent president.
Yeah, I mean, typically, you're never going to really have much more than 50% approval rating because, most races, even when there is a clear margin of let's say Democrats or Republicans in either the House or the Senate, it's still not overwhelming. You're not going to have 80% Republicans, 20% Democrats, or vice versa. So, it's very difficult to get over a 50% approval rating anyway. But this is obviously an important statistic. It's also important, though, too, that when you look at some of the presidents that have not gotten reelection, it is about the economy. Last time with President Bush, 41, not 43, basically did not get a reelection because, the economy was not doing well when he actually, came up for reelection. In this case, certainly the economy is in shambles, although, nothing to do with anything that perhaps a presidency or an administration could have done over 4 years, really tied more to COVID. So this is going to be interesting to see how this works.
So historically, how's the market done in an election year? There's kind of three different scenarios that we'll walk through here. Whenever you've seen a new president elected, stocks historically that year have done around 9.3%. In all election years, this middle column, stocks have returned around 11% and bonds around 5.5%. And your third option, which could be a possibility this year with if President Trump was to retain the White House, would be your incumbent president wins. And stocks historically perform the best in that situation with around 13% return. Really what this kind of speaks to as far as the incumbent president winning, we speak about this all the time. The market doesn't like uncertainty. And if there's a continuation of policy, typically the market responds very favorably to that.
That's right. I mean, to jump off that, I mean, I know there's a ton of polls that you're constantly looking at every single week. And some of them are very good, accurate polls. Some of them are not very accurate. But we would say that based on the portfolio managers that we have spoken with, most companies and the market are figuring that the incumbent president wins. And that's obviously we're not saying politically, we're not even telling you how we're going to vote. We're going to try and be very biased right down the middle here. But in general, even the same time in 2016, although we didn't have an incumbent president running because Obama was already termed out, but it was already just built in as a factor. You've got to build a portfolio one way or the other. And last election, as you remember leading up to it, Hillary Clinton was supposed to win hands down. So they really were banking on her winning and therefore continuing what President Obama had already, done for 8 years. And then obviously once she did not win, that had to change pretty quickly. In this case, I think most Wall Street firms and the markets are building in scenarios for both cases. You have to be prepared to, that anything can happen, especially after 2016 with all the polls basically saying that Trump didn't have a chance and all of a sudden he won. I think the same thing's going to happen this year, but I'd say that, if you're leaning one way or the other, I'd say the market is calculating, right or wrong, that President Trump will win and base portfolios off of that.
So this is a little bit of a busy chart, but I just kind of wanted to show that throughout history, whether it was Roosevelt in the 40s, Bush in the 80s, Clinton in the 90s, Reagan had such a run. But regardless of party affiliation, historically, the market in the S&P 500 over the past 100 or so years, you've always trended up. I mean, you could even see in places, between Bush and Obama, here's your Great Recession back in 2008. But we had through this, and then Trump continued it, basically since 2009, we've had this huge upward trend, and that happens time and time and time again, regardless of what party affiliation that you happen to be with. And you can see over, I mean, Carter obviously into Reagan, this long time frame of 12 years that we had growth, and then Bush not winning his second term, but still the market took off from there under Clinton. So historically, regardless, the market always finds a way to price in policy. So looking at that through the historical lens, we believe is important so that we wouldn't make rash decisions and base it more on policy going forward.
Yeah, I think that's key. That's probably one of the most important questions that we get from everybody is, who do we think is going to win, and how's the market going to do? And although our guess is as good as anybody's as far as who's going to win, we can at least look back at this chart and see how markets did. And so, are they going to bring about two different styles, two different things that they're going to bring into their term? If obviously if Trump stays in, then certainly he'll continue what he's already started. But he's got obviously a more upwards battle anyway to get more jobs created now that we're into COVID. And certainly, but you'll also have different ways that Biden, I think different things that Biden wants to do as well that could maybe alter the market in the beginning. I've been doing this for 33 years. I've seen a lot of elections, and so as that's happened, typically you've got to make adjustments, and the market will. And the markets typically, I've gone through 7 or 8 different elections during my 33 years. And there's always a honeymoon period. There's always a period of time where the stocks do well based on what that candidate or incumbent president would bring to the table, based on what he wants to do. I mean, just because Biden may want to do certain things or Trump wants to do certain things, it all depends on the makeup of the Congress too. If you lose both the House and the Senate, then you may not have a very good opportunity to do anything if you're a Republican. If it's all the same party, then you have the opportunity to do whatever you want. So, but just know that every time it's happened, doesn't matter. This chart is busy, but it's very clear. And the clarity is that the markets eventually, they sustain themselves, they get on track again. And although you have maybe volatility in the beginning, everything seems to work out.
And this next slide kind of piggybacks off this. I realize this is very busy, but I'll kind of take it one point by one point. All this chart is really doing is tracking the different types of outcomes you can have as far as an election. You could have a sweep of Republicans, you could have a sweep of Democrats, you could have a split where there's more Republicans in power, you could have a split where there's more Democrats in power. Really the key takeaway for us is this. If you look at a Republican divided and a Democratic sweep, what does that mean? A Democratic sweep means they take the presidency, the House, and the Senate. A Republican divided means that they have 2 of the 3. You have to have the presidency and 1 of, or the 2 of the House or the Senate. Those 2 scenarios, one of which we're actually already in, have performed the worst since 1789 back to George Washington's presidency. So really what this is telling us, can we prepare for this eventual outcome? Yeah, but it's also another key takeaway that if you look at all elections, even if you just have a Republican president, historically that has performed better. But we're also kind of splitting hairs here. We're talking about a 49% return over 4 years versus your worst case scenario, a 38% return. And this kind of plays to that last chart that we were just looking at, that regardless of all of these different outcomes, you do always tend to see an uptrend in the market over the long term.
With one exception, and that's COVID. I mean, COVID, you just, we just don't know what COVID does to change any of this because, other than H1N1, when Obama and Biden were in, really no one's gone through a pandemic of this magnitude. So that's always a question mark, that all these things can just be thrown out of the market. But this is actually since 1789. So this is really since the beginning, kind of keeping track of it. So just something else to kind of hang our hats on.
We found this chart very interesting. So this is a poll that was done as far as top issues. Granted, it's about a month and a half old, but the major issues, so we're in the middle of the pandemic, we're in the middle of the recession, And this was a survey that was done, I believe it was with 2,000 voters, and what percentage they said was the most important issue to them. What kind of struck both Dan and I is obviously the economy is top and healthcare is top, given what's going on with the pandemic and COVID, or excuse me, in the recession. But this was even more striking, that a Supreme Court appointment actually ranked higher than the coronavirus outbreak. Granted, they're close, but it shows how important it is, and it's as far as the forefront of voters' minds, how important that Supreme Court issue actually is.
And that's before Ruth Bader Ginsburg passed away.
That's right.
So now that's happened, if they did that poll over again, you could see that Supreme Court appointment jumps from third on the list to even something higher than that. So, we were quite taken back by the fact that coronavirus was fourth on the list.
Yeah.
Compared to everything else. And that's important, right? Because, I think most people, will survive coronavirus if you get it. We feel horrible for the 210,000 people in climbing that have passed away from it. But for the most part, it's more important for people, because I think most people are really doing a good job, because they can certainly make sure they don't get coronavirus if they don't go outside, right? If you don't put yourself in that spot, so then if you're not concerned about coronavirus because you're not taking any kind of risk to get it, then you're going to really worry about the economy and healthcare and other things like Supreme Court appointments. So we're really taken back by that.
All right, we're going to get into a little compare and contrasting here. So on the left side, we have Joe Biden. We're going to go through just a couple of issues as far as how they differ on policy, how they could interpret something differently. We're not going to get too much into the weeds with this, but we wanted to point out a couple things that were key issues. So with Joe Biden, he's already come out and he said that he was going to raise the corporate tax rate that was lowered under the Trump tax cuts to pre-2017 levels. So that's not necessarily a good thing for businesses, especially this time of year. We do think that it could be contributing towards some of the hiring that's going on, or lack of hiring that's going on, because you think about it, if you're a business right now and you don't know if Biden or Trump's going to get in, if Biden's going to raise taxes, you might not want to hire that worker that would come on board. Conversely, Trump would most likely push for further tax cuts.
And that's key. I mean, that's a key point that Seth and I speak about a lot, is you couldn't have two presidential candidates that are further away from each other. Biden wants to raise taxes. Trump wants to lower taxes. We look at two key figures every week. Thursday is when unemployment figures come out, and that just indicates to us any kind of new person that has applied for unemployment. But what's interesting to us is on Fridays, they have a more important figure, and that's the jobs being created. And that has been on a decline for the last several weeks. And that's concerning to us because, to Seth's point, I mean, if you have companies, if you're a corporation, there's a possibility that Joe Biden gets in as president and follows through or could follow through on increasing income tax rates on corporations, then you're going to sit in the sidelines and say, it's worth it for me to wait another 30 days to see if he gets in. If he gets in after that, then I make my adjustments. If he doesn't, then and Trump wants to have further tax cuts, well, then that might be good as well. So it all depends, but it's a key thing that we continue to look at is the Friday new jobs created number versus unemployment figures on Thursday is not as important to us.
So taking a look at the next issue, if we look at trade, Biden wouldn't use tariffs nearly as much as Trump would. Trump's already shown that he has no problem imposing tariffs to try to balance trade between the U.S. and our trade partners. Biden wouldn't take that approach necessarily. It would be more on trade balance. One thing that is interesting is you can see here for both Trump and Biden, tensions with China likely to continue. They're going to have a different approach to this, and really what this is talking about, and I think this is kind of key, I'm going to highlight this over here, protecting U.S. intellectual property rights and tech-related issues. We've just seen with TikTok what's been going on with that. So it is interesting to see on an issue like China specifically, as much as they may come off as very different candidates, they actually are addressing very much the same issue. They're just going to have a completely different way of approaching it. All right. Kind of piggybacking on something that they might have in common, regulatory and scrutiny of mega cap tech. This is basically your Facebooks, your Twitters, seeing some of the censorship that's going on posts that are being done on that. This is something that both of the candidates tend to agree on as far as regulation, because some of these companies have just gotten so big. As far as...
Well, let me just add something to that too. I mean, you know, many of you may not remember this, but, you know, in the early 80s, AT&T was really the only, you know, game in town. And so, you know, the government basically came in and broke them all up. And that, you know, obviously you still have AT&T today, but you have all those offshoots, Sprint, Verizon, they all came out of the AT&T breakup. And so hard to fathom that they would be able to, you know, take a company like Amazon or Google or Facebook and chop it apart and basically make them spin off these other ancillary products. I mean, certainly it's good for diversification for them, but you know, basically it's amazing for these companies to feel that no matter who gets in there, Trump stays or Biden comes in, they're coming for these companies.
Yeah, absolutely. As far as industrials, I mean, they couldn't be much different as far as how they're going to be approaching the industries. Biden's campaign has called for massive spending and also tax incentives to create jobs as far as this Green New Deal and the greening of the U.S. Industry. The other key thing that Biden's campaign has come out and said is modest downtrend in defense spending after 7 years of spending more. It could be a potential issue for industry because we just spend so much of our GDP as a country on military spending, way more than I think it's than the next 10 countries in the world. As far as industrials, Trump, you know, his policy has been established since he's come in. So you're focusing on the tariffs, environmental deregulation to be able to open up different areas, specifically with U.S. government-owned property. And he also has potential modest downtrend in defense spending as well. What's interesting about that is we've heard more that it's going to kind of be a status quo as opposed to more of cuts on Biden's side. So they really do have very, very different platforms as far as the industry side of the discussion. So we kind of love this slide. Dan and I speak routinely about what happened in 2016, and it's apropos to speak about it again. I was at a training with about 80 other advisors on this election night. And as Dan mentioned previously, the markets were expecting Hillary to run away with it. And I remember speaking with about 10 advisors. We were out and we're starting to see the returns go in. And we were seeing headlines like this. You were seeing that because the market had not priced in Trump winning, that you were starting to see massive volatility and the markets were really spiraling out of control, down 750 points. So this is November 8th, 2016 at 11:42 at night. Just keep that number and date in mind. Because if we just flip the calendar one day, it's literally the next day at the close of business as far as the stock market, that's Dow surged up 250 points. And basically for the next 3.5 years since then, it's been, other than a blip in 2018, we've seen an upward trend. So it just kind of goes to show you, I mean, we speak about this routinely, that the market does not like uncertainty. And you see it whenever it doesn't know how to price in policy, you see that volatility. And here's a great example just happening within literally 24 hours of an election.
Yeah, typically the same kind of story that Seth had. I mean, I actually was watching it from home, went to bed around 2:30 in the morning. And, you know, obviously they pretty much had declared that Trump was going to win and the market was going to open down about 1,000 points. By the time I woke up at 5:30 in the morning, you know, half of that was already trimmed back. And then, of course, the rest is history, certainly looking at this a couple of days later. So you just never know. I mean, certainly, look, if it was Biden and the markets wouldn't be it wouldn't be really off kilter to expect it. I mean, he's ahead in most of the polls that you see. I don't think there's a single poll out there that says that Trump is ahead. But typically, if that's the case, at least this time, they'll know exactly what's going to do well with a Biden presidency versus a Trump presidency. So that's one thing that will be a little different than 2016's election, that's for sure. Okay, where do we go from here? It's a good question. I mean, the key thing is, and we'll get into that during part 2 of our next video in the next couple of weeks. Safe to say that we have a plan in place, and that plan has already been executed flawlessly. And basically, it has been pretty solid all year. We've used cash, we've used gold, and continue to use those asset classes and bonds. We certainly have money in the market as well, and the more aggressive portfolios, we have more in there. But we know exactly what we wanted to do because obviously we've designed these portfolios and customized them over the last couple of years because we expected a recession. We certainly didn't expect to go into one this year, but certainly, COVID pushed us there a little quicker this year. But still because of that, it doesn't mean that we are going to change exactly, what's going to happen depending if Trump stays in or Biden gets in. So, we'll talk about that a lot more in the next video, but safe to say that, we're feeling very good about the way things are structured for pretty much, all of our clients across the board. And I think that we're ready. We are ready just in case something does happen that's out of the normal. And sheesh, I mean, there's no such thing as a normal this year, that's for sure. It could be, really anything whatsoever. My hope is, and I think that we're probably all tired of the politics by now. Obviously, we've seen the first presidential election, the only vice presidential election. And who knows if we'll have 1 or 2 more presidential elections or none at all. But it's going to be a lot of back and forth as we get closer and closer to November 3rd. So we think there's probably a good possibility that we won't know who the president is the next day. But basically, that could surprise us too and could be figured out. So, we will have to see. But our next video will address all that, and I think you'll have a much better understanding of how things are looking right now. So, between now and then, any questions at all about the market, about the presidency, about how things are going to affect you, if you're feeling nervous about, the economy or God forbid, COVID resurfacing and how things are looking for you, how it affects you, please don't hesitate to reach out to us. That's what we're here for. We want to hear from you. We want to make sure that that we're on the same side of the table as you, that we're ready for it, and we're prepared for whatever's going to happen. So we're in really good shape. We believe we're in really good shape.
Yeah. I guess the last thing I'll just say on this, I kind of always like to end these videos with, we have a plan on our side, just like you have your financial plan. We always go in having that road mapped out. So if you're having anxiety, which we've spoken with a lot of people that are anxious for this election coming up, I know that the contingencies are being taken into account. And if you have any questions to piggyback on what Dan was saying, feel free to reach out. As we said in the beginning of the video, make sure you go out and vote. There's people that fought for your right to do that. And that's all I have.
Sounds great. Have a great weekend, and stay tuned for the next one as well, okay? Take care.